Let's see what we've got going here. That's off. No. Chat is on. Okay, good morning, everybody. I just want to kick things off. Just a reminder that all materials we do present are for training purposes. Traders should always pay for trading. Any method private risk of their own personal capital. Past performance is not an indication or a promise of future performance. The big question I have for everybody is, have you ever found yourself paralyzed, unable to make a trading decision, haunted by the what ifs? And if you have, you're not alone. I know that I have felt that many times. And, what about you, Anil? Have you ever kind of like, I don't know what to do. I'm just freaking out.
Yes, happened many times. I'm trying
And so
to get over it slowly.
you get over it slowly. The thing about it is that, we're going to dive a little bit into, this trader's dilemma, the fear of making decisions or making the wrong decisions. There's a lot of dots to connect with that. This fear can freeze your potential and hinder your trading growth and also your profitability. There's 3 actions you can take to kind of overcome decision fear. First is education, not just learning how to trade, but educating yourself about yourself. So that you understand both the stocks, the markets, but also your own susceptibility to being swayed by fear. And sometimes if you recognize that, you can actually speak to you. This sounds kind of weird, but you just speak to your fear, speak to yourself, your other self, and say, I'm not going to be afraid of this particular trade. Secondly, is if you have a solid plan, your plan's your roadmap to guiding your decisions and giving you confidence. Lastly, practice makes perfect. One of the things that I encourage people to do is basically do simulated trades where you go back and you work over your setups, both your entries and your exits, over and over and over again, and focus on the good ones, and in your mind prepare for the what ifs. So, hey, keep these things in mind. And, if any of these resonate, if you've ever had fear of making a decision in the stock market, if you would just put a Y down in the chat box, I'd really appreciate it. Let us know. And because it'll let everybody know that we're all in the same boat together. So Fran says yes. If you're ever on the YouTube channel, please do the same over in the chat box. Hey, Jim Lee, good to see you, buddy. Glad you're over there. So with that, let's go ahead and jump into the next session, which is our potential market movers for the week. This week, we're seeing kind of a mixed market. Anil, I'm sitting there going, this market, while it is going up and hitting new highs, I just have this, and again, I have to trade the charts in front of me, but I have this sense that something is getting ready to break. Part of that is due to the overextension. So the NASDAQ and tech are climbing. The S&P is kind of stuck in where it's at. But the small caps are getting, they're getting kind of the snot beat out of them. AI stocks are on the rise, but what about our buddy Tesla? If you would like to see a video on that, I'll do a special video on the YouTube channel talking about where Tesla is going for the year. And let me know, leave a comment saying, yes, I'd like to see that video, and I can pull that together because I'm working on that, because I'm looking at Tesla right now. Anil, would you buy Tesla? if it got back down to 120 bucks?
No, these days I'm strictly looking at the accumulation distribution up down volume ratio.
Okay.
And that Tesla has a C minus on accumulation distribution.
It does. It's not in a good place now. But well, no, I appreciate that. And I respect that. But a lot of folks are saying, no way can Tesla get down to 120 bucks again, right? They're saying, no, just the company's too good. But what happens if it would? So if you want to see a video like that, let me know. And so let's go ahead and jump over into what we do best is, first we're going to analyze the S&P or its ETF counterpart. And for those over on the YouTube channel and also live here, one of the things I learned last week, I'm going to let the live stream repeat over on the YouTube channel. So please let people know that they can see that again and again and again over there. And that way you get the whole enchilada, the full Monty on that. So let's go ahead and jump over into the reset up a little bit. There we go. And let's take a look at the spiders. And here's what I'm seeing on Neil. This is kind of, okay, one, the S&P and the spiders are breaking out to new highs. This is a great thing for the markets longer term. Are we going to rally through the end of the year? And it's also a great thing that's happening toward, we were halfway through January, and this is an excellent, I won't say it's an excellent opportunity to buy right now, but it's telling us we're heading in the right direction on the S&P. If I look over here on the weekly chart, however, I have a couple of things that are just that we need to pay attention to. One, I'm hitting a new high here. However, what's my momentum doing? Is my momentum hitting a new high? No, it's not. It basically is giving me a little bit of a negative divergence. With that said, though, until this green line here on the market forecast on the weekly chart, until it dips kind of down back below the 80 level, we have to respect that this market is still going to be heading up. And that's kind of a trigger you can, if you don't know about that, that's a trigger you can look at. If we drop, the market forecast drops below the 80 on the weekly chart, that's oftentimes a signal to, either start trimming your profits, consolidating your profits, and or taking downside trades if that's what you do. So that's one of the things we're looking at. Hasn't happened yet. And note that the market forecast green line can stay above the 80 line for a long time. On the flip side of that, I want to be looking for when the market forecast green line pops on a weekly chart, pops back above the 20 line. That's a great indication that we're going into a longer term uptrend. So a very, again, if you didn't know about that, just let me know that, wow, I didn't know that, and I'll be start watching that going forward. So that's what I've got going with the spiders. We're pushing up on the weekly chart, same. We have a negative divergence going on here, negative divergence going here on the daily market forecast. So even though we are pushing back up to new highs, I'll be waiting for a couple of things. One is a reversal signal, a candlestick reversal signal. I will wait for it to basically retest up here. Once it does set in a higher high with a reversal signal to see we get a retest, and that would be a signal that it's time to, basically secure our profits and or get ready to take a trade to the downside. So that's what we have for S&P. What about the Russell? The Russell is the poor Russell. Oops, let me get the chart back up. The poor Russell. Anil, do you feel sorry for the Russell? I mean, I do, because it is like the redheaded stepchild of the indexes, right?
Yeah, it's looks choppier
And
on
so
the chart.
with that said, though, folks, is, as we approach 2 weeks before the Fed meets to potentially lower interest rates, which some people say they're not going to do it now, they're not going to do it in March. They basically it's off the table again. We'll see. The news about the Fed raising or lowering rates has impacted the Russell big time. So on the Russell, what I'm seeing is a couple of things. I'm getting a good flag here. Look where we've pulled back to. We've pulled back to the 618 and the 50-day moving average. At the same time, is Russell a buy right now? And I have to say, no, it is not. It needs to basically break back out above this red line right here. And also, you can draw a line here across the TSI. And if it breaks back up there, it is basically broken its basically downtrend. However, we've got to look over here we're getting so many mixed signals. The TSI on the weekly chart rolling over. Last time that happened, we did this plunge here. So we have to take that in consideration. Watch the 50% retracement and the 38% retracement. We've already tried the bounce, and we're bouncing off of the 618. We had a two-line cluster last week, and oftentimes that leads to a nice bounce to the upside. At the same time, though, warning, the TSI, the market forecast green line is starting to drop below the 80, the 80 out of the overbought condition. And if it breaks down below that and closes below that on the weekly basis, watch for a ride continuation down to the downside. So I'm watching this very closely. And again, I'm not buying the Russell at this particular time. The one I am looking at buying is not that. Is the QQQ and or the ETF for the NASDAQ. Look at that absolutely fantastic breakout. Now, here's a way to basically look at trading these. One, the NASDAQ is breaking out. It has all the power behind it. So look to trade that to the upside. The S&P, if you want to trade the S&P, you may look at, riding along with that, because I know a lot of people, they'll buy the S&P or they'll buy UPRO because it's a little bit less volatile than the NASDAQ. However, over time, the NASDAQ has outperformed the S&P dramatically. So you may want to look at a little bit of a mix there on that. So really nice breakout today. Let's see what happens. And now that we have a breakout, I'll be looking for a pullback towards this breakout area. In other words, that's 412.91. The move to the upside today has also shifted the TSI on the weekly chart to actually basically crossing back up to the bullish position. And as long as, this could almost be a new written rule, as long as the market forecast on the weekly chart is above the 80 line and not crossing down below it, we want to look for bullish trades, not bearish trades. And so, Anil, that's what I've got going with the Qs. A similar type situation, I'll be looking for when this starts to stall out, and we'll know that when we get a proper candlestick reversal signal, like a inverted hammer, a shooting star, a bearish engulfing, or a dark cloud cover. So that's what I've got. What do you think?
Now on my triple screen system, on the weekly charts, everything looks strong. And on the daily chart, there are some weaknesses, but other than that, it's consistent with exactly what you just said.
Okay, excellent. So, yeah, anonymous attendee, since I don't have your name. Yeah, if you could drop your questions over in the chat box, because I really don't look at the questions, but you ask about where we can find the market forecast. It is available on the Thinkorswim platform. And if you trade the Thinkorswim platform, and it may be available over on TradingView. I think it is now, and or a simulation of it. And so, Jim Lee, I know you trade TradingView. Yeah, can you get to the market forecast? Is it available for general population on TradingView? So we'll wait for Jim to answer. And so Anil, yeah, really excellent. So we've got, the tail, I think it's almost the tail of two markets. The tale of two markets. And so let's see where we go from here. So what's next, folks? I'm glad you asked, because what's next is our face-to-face segment. And we've got one heck of a great question today. And so I'm going to basically stop sharing my screen so you can see Anil and I. Oops, stop sharing. And I'm going to get us up here in a gallery format, Anil, so we're side by side. And as I said, it's been another great year, as we can see here, and I'll just click through this just a little bit. I'm tracking up my 40% line. Here's where, as of about just before we came on air, this is where we're sitting. Notice that the market there, the Dow, the S&P, and the NASDAQ are all hitting new highs. The Russell is still could be considered in a bear market, so that's kind of interesting. So, hey, our phase today, Anil, we are going to bust a big myth. And while you guys are listening to us, let me know. Drop a note in the chat box or over on YouTube. Drop a note over there. What is, at your particular point in your trading career, your trading mastery, what was one of the myths you used to believe about trading that has proven to be false? So today's myth that we're going to bust is what I'm thinking is more trades equal more profit. Is it a reliable strategy, or is it a road to risk and breaking the bank? So, Anil, what are your thoughts about more trades equal more profits?
Not really. Where I have boiled it all down to is the batting average and reward to risk ratio. A close watch on that will take us to the next level we go.
Okay.
If you just simply go on the more trades but not pay attention to those two metrics, you're in a heap of trouble.
Okay. Did you ever fall for this myth that, if I'll just trade more, I know my luck has to turn around?
Not on that one, but what I did fall on, I remember many years ago, that I got to increase my trading account, to be more profitable. But that was a myth.
So, what I find is like this, along with a lot of other myths, what I find is that they are things we hang our hat on so that we can ignore trying to improve as a trader. You know what I'm saying? So in other words, well, if I only trade more, of course, I'll have to be more profitable. But the thing about it is trading the little bit that that a person's trading. I know this, speaking for myself, I wasn't profitable doing that. So the kind of the rub in the whole thing is to trade smaller, learn how to become profitable and repeatable, And understand that if you can get to the place where you're trading, where you're winning 60 to 65% of your trades, and you're carrying a 2-to-1 risk reward ratio or profit loss ratio, guess what? You're going to have an edge, and you're going to be able to basically be profitable with your trading system. So that's it, folks. And thanks a lot. Mike says easy money. Anybody else on that? On a lie you may have believed? And if not, yeah, stay tuned, because after we debunk this myth, we're going to be revealing our stock picks for the week. And trust me, you don't want to miss the insight on those. So if you're finding today's session valuable and you're ready to take charge of trading, your trading journey, hey, hit the subscribe button below, and again, turn on the notifications so that you get notified when I post new things over on the YouTube channel. I encourage you, join our community of traders. I love the family we've been developing, and we'll basically help you, pave the path to financial and lifestyle freedom. And because I know you have got what it takes. And so let's go ahead and start jumping into let's jump into our stocks and ETFs for this week. We've carefully selected some really great stocks, and Anil and I have had a very good track record on the stocks that we've picked. And so as we reveal the stocks, remember, the further we get down on the list, we stack the deck. We put the best stocks at number 3 and number 4. And so let's go ahead and jump in and take a look at the best stocks we have to offer. And why did that not come up? There we go. There we go. So the first stock we're going to be taking a look at is, now I don't know a lot about this one, Anil. I know it's got really great, but it's Kinsale Capital. So what's the story on this?
As a matter of fact, I did not know about this stock at all. I was just putting up my favorite screens, and this thing showed up with SMR of A, and accumulation distribution of B, and up-down volume ratio of 2.1. So I dug a little bit further, and it's in the insurance business, and it's industry group 52 out of 197 on MarketSmith. It's 12% to pivot, and it's giving me triple screen signal, so at least it has 12% to go before it breaks out, and therefore I picked it.
Okay. Yeah, and I apologize for the screen being out of the, is that better now, guys? Can you see the top of the screen, or where the chart is?
I don't see the screen right now.
Oh, yeah, darn.
Maybe you need to share the screen, I think, and
that would help. And so I thought I did. Hold on just a second. Too many moving parts today, folks. Hold on just a second.
I think I just see you and me on the screen right now.
Yeah, not a problem. No wonder. Stand by, folks. There we go. So let's rewind this really quickly. There, is that better? Okay,
Yeah.
that's better. Okay, hey, let's rewind this really quickly. And as I said, let's jump into today's stocks. We've got some really great wins, and we'll start with Anil stock, and now can you see it? And can you also, the question I was asking, can you see the top of the chart? Because I know there's a little box here with both either Anil or I when we're talking. So
yeah, I can see the screen now. Yeah.
okay, great. So again, so this is KNSL, that's Kinsale. And what was the story on it again, Anil? I'm sorry.
It's in the insurance business. I didn't know the stock. It just showed up on my screen, and it says very strong fundamentals, and number 52, I believe, on the industry group
Okay.
setting. It's 12% to pivot, and something it's forming the right side of the base, and I get
Yes,
a
it is.
I love it because I know I at least have 12% before it breaks out, where it may have some hesitation right at that. So
Okay. Here's a big question for you. Okay. And I get this question occasionally. Okay. The volume on this okay, it's basically its average daily volume is only 202,000 shares. Is
yep.
that a concern to you?
Yes, that is a concern. I usually would like to have at least 250,000.
Okay.
This is a little low, but with the strong fundamentals, I picked it.
And here's a really great important lesson that I think everybody can learn is okay, given that it's kind of an exception to your rules, and that's fine, but do you have a fail safe? Do you adjust the rules like where you watch it extra closely because it is so lightly traded?
Now there comes the my sell rules, and I'll put about 5% stop and then see whatever happens, happens.
Okay, excellent. So, okay, my first pick for today is I've been watching this one and just can't get into the darn thing yet, but I like Pinterest. And now, why do I like Pinterest? Because my wife likes Pinterest, I have to tell you. That's and no, Pinterest has got a comp level of 99, accumulation distribution of an A plus. People are buying this, but it just hasn't launched back out yet. And up down volume of 1 point ratio of 1.6. And right now, the what it's showing me is when we're driving in a horizontal flag like you see here, that is a very bullish type of a pattern. Um, it's a stronger pattern than a down sloping flag, but I don't want to buy it where it's at unless it meets certain criteria. And that criteria happens, excuse me, happens to be if I did buy it right now, how far am I away from the stop loss? And if I put my stop down here below the 50-day moving average, I'm looking at it and going, that's about 7% away. What would be a better entry place for this? I think is wait for it to pull back and retest this little hammer right here. Let me blow this up just a little bit, shrink this down just a little bit. Wait till it comes back and tested it in this wick because it's tested over here several times and bounced back up. And so like I said, the lower risk trade is to wait for it to pull back into this area here. And it may blow on through that and take out the 50, but from there, I'm only 3.4% away from my potential stop loss. And so that is well within my rules. The other thing I can do on this is wait for it to get down to that area. And if you wanted to take a more conservative route on it, is wait for it to get down there and then wait for the reversal, then take the trade from there. That's another way of approaching this particular obstacle or that particular uh, setup and then trade entry. So it's really, really good. And so any questions on that? Okay, next is, I just love seeing this name. DDOG is Anil's next pick.
And that's in the computer software business. Again, very strong fundamentals. And this one on the MarketSmith chart, I believe has a double bottom breakout.
Okay.
And I also have a triple screen signal a while ago.
Okay.
So I like it. And that's the reason I picked it. Its fundamentals are very strong with Comp 99. SMR rating of A, accumulation distribution B, and up down 2.2.
So are you buying it right here, Anil, or are you going to let it pull back just a little bit?
Maybe just I'm going to watch until.
Okay. Yeah, because we had a breakout right there. But yeah, here's the those of you who aren't familiar with, here's what I'm seeing as the double bottom. Now, the IBD double bottoms are a little bit different than a traditional technical double bottom. But anyway, it's basically you can see on the weekly chart, and you see we pulled down, came back up, and now we've broken out. And then it went, once it breaks out above that level right there, that's considered one of the entries. Another entry, if you want to do an earlier entry, is on the double bottom alternative entries. Let me get rid of the, and I know you know this, is here was another entry, potential entry down here as it broke back up. But when did it do that breakout? Right at earnings. And so if you're a premium member, I'm going to be talking a little bit about some of these alternative entries and also alternative exits that you can be looking at because of one of the trades that we did this week. Just kind of it went the wrong way. And so we're going to take care of addressing that. So that's what we've got for DDOG. My next one, as you guys know, I like to provide everybody I like to provide everybody and I've got a toss up here. And so I'm going to go with, I think I was first looking at SQQQ, but I'm going to go with LABD. Now, LABD is the inverse leverage ETF of XBI, the biotechs. Now, why I'm going to do that? Now, I'm not going to short this where it's at. It's got to show me that it's going to fail here. And why am I interested in this? One, as I said earlier, my market forecast has dropped below the 80 line. We have pulled back down below the 20-day moving average. I mean, we'll be looking for a cross of the 20 and the 8, and I have bearish reversal signals over here on the weekly charts with the TSI looking like it's going to roll over, and also the TSI, the market forecast, looking like it's going to roll over. It has not dropped below the 80 line yet, so I have time to wait on this. But I want to see what it does when it tests back up in that area there. If it bounces back up, rally attempt fails, then with that, I want to be shifting and trading. It's LABD, excuse me. And LABD is the leveraged inverse ETF of the XBI. And so what would that look like on this chart? Well, on this chart, for it to pull back into that area, it would look like this. It would look like a pullback back here to retest these past lows, let's say about $8.66. With the flakiness that's been going on in the market over the last several weeks, I am not going to try to fade this trade. I will wait until I get a pullback and a reversal. But look what's going on. I've got very positive indication. My market forecast on the daily chart is crossing up. My TSI on the daily chart is already crossed up. But look how sweet that looks over here on the weekly chart. We had a two-line cluster 3 weeks ago here, and then we're getting a reversal back up. Again, if this continues to work its way back up, I would be interested in a particular trade, especially if it dropped down to about there. And that about there equals, I'll put an alert on this, about $8.90. And again, I'm not going to take action on it until I actually get a confirmed reversal. I'm not going to try to fade this particular stock. So what do you think about this one, Anil?
Looking on the screen, and the MACD has reversed on the daily chart, showing the uptrend.
Okay.
8 and 20 still has not crossed. So if I'm buying it, I would probably wait until it crosses up.
Okay. Yeah, I think we're getting to the stage of the market where waiting for confirmation is not a bad thing. So let's see. Okay. Those are some great stocks. And hey, I love this quote by Mark Benevini because it says the key to success in the market is to have a plan and stick to it. Even when it's uncomfortable, it's the trader who can manage their emotions and stay disciplined that come out on top. And I was just looking through the ancient script a little bit earlier on, and there's this in the ancient script, it talks about where there is no vision, the people perish. Well, another translation of that is that where there is no vision, the people are out of control. And if you're out of control, what does that mean? It means you don't have discipline that Mark Minervini is talking about right here. That is so, that's just so awesome. So anyway, hey, just a real quickie. I want to highlight this week the Precision Entry Point routine course. It's over on our training website. I put this training course together because it demonstrates three strong strategic trading signal that when they're combined, they can improve your results. I'll put a link down in the I'll put a link for this down in the description so you can, if you're interested in it, you can get on board with that. And it comes with about $400 worth of additional videos that will teach you everything. It'll teach you how to trade candlesticks if you're interested in doing that. So, okay. Well, if you found value from today's session and you're ready to, revolutionize your trading in 2024, join us every Friday. Hit the subscribe button and you'll be notified when we're getting ready to do the live stream. And so Neil, just an absolutely big thank you to you for everything you bring to the table. It is so valuable having you partner up and present stocks and your insight, your triple screen system. And so when's your next meeting with the Delaware IBD group?
I have not picked the date yet. Maybe early next month, but I'm not sure.
Okay. And folks, for those of you who join the Bay Area Moneymakers, we'll put something together for the first part of February in order to kickstart the rest of the year. So remember, you are in control of your own journey, and we're here to guide and help with every step of the way. So trade smart, stay focused, and make 2024 your year of trading triumph. So we'll see you next week. Well, no, we won't see you next week. Week after that, because I'll be in Modesto, California next week. So aloha, God bless. Thanks a lot, Anil. See ya.
Thank you very much. Enjoyed being here. I always learn something